Good morning and welcome to the Daily Hunt for Multibaggers on this Sunday, May 31st, 2026. We're here to dive into the latest market buzz and AI-generated insights from yesterday, May 30th.
That's right, Ethan. Our systems have been churning through a really active day of social media discussions. We saw quite a few posts flagging several different stocks for our attention. Overall, the sentiment out there is a real mix, with some very risky plays showing high community interest, but also some strong skepticism to balance it out. It's shaping up to be a fascinating discussion today.
Absolutely. Let's kick things off with Adobe Inc., ADBE. Our AI flagged 16 related posts, and the original bullish case was quite compelling, talking about an impending software rotation, a new CEO coming in, and even some influencer support. And when you look at their fundamentals, Adobe is a money-printing machine. Their net profit margin, return on equity, and EPS are all incredibly strong. Plus, there's been significant insider buying, which is always a bullish signal from those in the know.
Well, Ethan, while those profitability metrics are certainly impressive, the overall sentiment that our analysis picked up was in fact bearish. Despite that initial optimistic post, the prevailing discussion among users was highly skeptical. Many were calling Adobe a victim of Gen AI, arguing it's not actually an AI play, but rather losing ground to competitors. And let's not forget the price action. It's nearly 40% down from its 52-week high. That's a significant drop that validates user concerns about its recent performance. Plus, a 12% revenue growth rate, while decent, isn't exactly screaming hyper-growth AI leader, is it? We've rated Adobe as stay away twice before this year. And from a KPI perspective, I don't see enough fundamental change to warrant an upgrade.
I see your point on the growth rate, Brooke, but the insider buying and the potential for a new CEO to really leverage their AI ecosystem could be game changers, pushing those KPIs higher. However, for now, I'd have to agree that the immediate growth catalysts are overshadowed by the strong bearish sentiment and the previous stay away ratings. So for Adobe, ADBE, our verdict is stay away.
Next up, we have Virgin Galactic Holdings, Inc., SPCE, which generated a massive 66 related posts. Ethan, this one has a split sentiment, but overall, there's a huge wave of community optimism here.
You got it, Brooke. Our AI flagged SPCE with a really high bullish sentiment from some of the social media discussions, like a strong to-the-moon vibe, People are talking about massive market cap expansion, calling the current valuation peanuts. Plus, it's near its 52-week high, showing recent momentum, and there's been significant insider buying, a huge vote of confidence. The recent news, like a competitor's issues and the restart of flight testing, seem to be fueling this excitement.
I hear you, Ethan, and the excitement is definitely palpable, and the insider buying is certainly a positive note. However, our analysis actually picked up two distinct sentiments for SPCE. While one thread was overwhelmingly bullish, another key discussion we analyzed was quite bearish, with one user even explicitly calling it garbage. And when you look at the KPIs, well, they tell a starkly different story. We're talking negative revenue growth, no profit, massive losses per share, and an extremely high debt-to-equity ratio. These are not just red flags, Ethan. They're practically scarlet banners waving in the wind. We've never rated SPCE on this podcast before, but these current fundamentals screen caution.
It's true, the fundamentals are challenging, but for some, that lottery ticket potential, especially with the insider activity and market momentum, might be too tempting to ignore. But our goal here is to give listeners a balanced view. Given those deeply negative KPIs and the high-risk nature, despite the community's enthusiasm,
I think we have to call it, Ethan. For Virgin Galactic, SPCE, our verdict is stay away. The speculative nature and the dire financial health simply outweigh the short-term momentum and hope for future gains.
All right, moving on to Wolfspeed Inc., WOLF, which saw 10 related posts. The initial post was incredibly bullish, painting Wolfspeed as the key to solving AI's grid connection problems with their 10 kV MOSFETs, even hinting at a huge short squeeze. And get this, the stock has seen a massive rally recently, up over 600% from its 52-week low. Plus, the insider buying for Wolfspeed is just astounding, over 600% of total insider shares purchased in the last 6 months. That's serious internal confidence.
Ethan, I appreciate the optimism, but the overwhelming sentiment here is deeply bearish. Our analysis, drawing from detailed user comments and even former employees, points to a clown show of management, a history of poor execution, and skepticism that this AI pivot is anything more than a pump and dump. Many users directly challenge the technical claims in the short squeeze narrative. And when we look at the KPIs, it's just a sea of red. Negative revenue growth, an extremely negative net profit margin, and an unbelievably high debt-to-equity ratio. The company has a history of bankruptcy, and these KPIs suggest those fundamental issues haven't been resolved, despite the insider buying. This stock has never been rated on the show before, but it's hard to see a path to a positive rating right now.
You know, it's tough to ignore those numbers and the strong community skepticism, especially from people with direct experience. While the AI narrative and insider buying present a tantalizing long-term possibility, the current financial health and the pump and dump concerns are significant. So for Wolfspeed, WOLF, our verdict is stay away. So to quickly summarize today's discussions, Brooke, it sounds like we're navigating some pretty turbulent waters out there with more caution than clear-cut opportunities.
That's a fair assessment, Ethan. Today's analysis really highlighted the importance of looking beyond the hype and digging into those critical KPIs. For listeners who want to dive deeper, here's our compiled list for deeper analysis. Investigate as buy, none. Investigate as cautious buy, none. Investigate a speculative gamble, Virgin Galactic Holdings Inc., SPCE. And that wraps up another episode of the Daily Hunt for Multibaggers. Before we sign off, remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in today, everyone. We appreciate you joining us on The Daily Hunt. We'll catch you next time.